All right, let's take a look at crude oil through the lens of the Strat method. Looking at the monthly, you can see what's been going on here. For 4 months in a row, we're moving up. This is called a 222 continuation because basically every month it's making a new high and a higher low. Higher high and a higher low. 3 months in a row. That's a 222 continuation. And then it come down to the weekly chart. You can see a little bit more detail of this move. And basically, once that corrective action was over, it kind of started a little haltingly, but once it got moving, good Lord. And this past week, I mean, my goodness me, the thing is just broken free. That's just a wild weekly candle. So this was an outside candle. So you have, you can see the pattern, right? You get an outside candle, kind of expands range. And then the next time it breaks the high of that, it doesn't touch the low again. So you had 4 twos in a row. Then you had another outside candle. And the next candle broke out and it didn't touch the lows of that outside candle. And the same thing happened 3 times in a row with the 3, right? With the outside candle. The following candle are twos. So here you had 4 twos in a row, then you had an outside candle, then you had 2 twos, an outside candle, and then now we've just had another set of twos. This is just craziness. Bonanza. So that's the weekly. And then you get down a little bit more granular. Let's go to the daily. So the daily shows you the breakout that happened. And then now we had some consolidation up here, definitely whipsaw. But the week ended on a high point. Well, you can see that here, right? The week ended on a high point, and in particular, Friday ended on a high, but it did not make a new high over Thursday, right? It's just wild action this past week. But, you could view this as a breakout and then consolidation, high-level consolidation. But the point is, you have an inside candle now on the daily, which we haven't had an inside candle in quite a while. So the idea with the inside candle, as you know, put a box around the preceding candle. That gives you the range. Right now, I've also put a box around the monthly candle, which you can see on these lower time frames. That's the bigger box. That's the monthly range. Even though we're only 5 days in, this is the range of the month so far. And then this daily candle from Thursday gives you, a little bit more of a micro range to think about. So the idea being, when we open on Sunday night with the futures, if we can get a new high, you're going to basically have the potential for what's called a 2-1-2. I don't know if that would, I think it's a continuation per strat. So you had a bunch of twos. Now you have an inside candle, which is reflecting that consolidate on the lower time frames. You can see the consolidation. We'll get to that in a minute. But so you got this inside candle on Friday, with it closing up near the high. So when we initially open on Sunday night, barring a gap up, it's going to be another inside candle, and then we'll see. Now here's where I deviate from the strat and I use other methods, and in particular the squeeze method, the John Carter squeeze method. And you can see we had a daily squeeze starting to form as price was consolidating down here. And then it finally released on, I guess that was Tuesday. And then now the squeeze is in effect. I mean, my gosh, that was beautiful. This is really great to use in conjunction with the strat because it gives you more clues. So even though we had this high-level consolidation in here, this choppiness between Thursday and Friday, the squeeze, the daily squeeze has just started to get going. So my expectation based on the squeeze method is that its rule of thumb is 5 to 7 periods of directional action once a squeeze fires. So clearly this squeeze has fired to the long side. So, this week, this is only 3 bars. So we'll get Monday will be 4, Tuesday 5, Wednesday 6. So if this play now look, nothing is 100%, not even close, right? The squeeze method, for my own, I mean, I've been using it for, I don't know, a year and a half pretty intensely. And I've seen them fail. When they fail, it can be very frustrating. But when they work, it's pretty remarkable. So this one is working at the moment. So what I'm saying is, if you can get 5 to 7 more bars, like if we can get in this week to more upside action, I would expect that to continue. And we've run out of targets on the Strat method, but that's where the third method that I like to use, the Elliott wave, comes into play. But I'll get to that in a second. So for right now, if you're just looking at the daily chart, you've got an inside candle. So until this thing breaks out and makes a new high, just be aware, just be cautious. And we'll use the lower time frames to get a grip on things. But you got a daily squeeze in play, and it's only 3 bars in. So expect 5 to 7 bars, even though I've seen other squeezes go on for 12 bars. And I've seen squeezes fail. Some of them are duds. Okay, so now let's go down to the 4-hour. Now you can see a little more detail, right? This is the monthly range that I drew on that other chart. Of course, the monthly range is only 5 days old. But so here we are. We've just been going higher ever since March 1st. And then we had this dip, and then it came back up, and it's flirting with busting out and making a new high. Okay, and that's what you're seeing here. So when this opens on Sunday night, this currently is the range. I love to just draw a box around the candles, and then as you go down in the time frame, that reference of the box will be there for you, just so you have an idea of the overall. Where has price been? Where might it be going? It just gives you some context. Now I did notice the 4-hour came into a squeeze on Friday, which is interesting. The histogram came down, as you can see, and then it kind of came into a squeeze. But I don't know. The lower time frames you get, it can get weird. There's more uncertainty. But as I say that, I'm using the lower time frames all the time, because in futures, you have no choice. Well, you have a choice if you have a huge account and you don't mind taking heat. But I'm not that way. I like to play real tight in futures because I can't take the pain. Who wants to take pain if you don't have to? And the Strat really helps with that. Okay, so that's the 4-hour. It's in this range now, and it came back up on Friday. So we'll see. Now let's drill down a little bit more. So on this chart, I like to keep the 4-hour there, even though I just talked about the 4-hour. I like to have it on this chart. And I have different markings on this chart. So just looking at going from the 4-hour, I like to watch the 1-hour. So now here you can see, this is really cool. So this candle from Thursday is a ginormous 1-hour candle. So immediately put a box around it. And then anything that happens inside of that box, I generally regard as chop. And what I like to do is put some fibs on any kind of outside candle that I consider to be large. I put fibs on it to mark the 50% fib, and I use these aqua colored things to do that. And so in general, if you get a continuation above the 50% level, that is going to help me be bullish. If you get a continuation move below the 50% level, that is going to help you lean bearish. But the thing to remember is, as long as this range of that outside candle remains intact, you got to be careful. Okay, it's whipsaw. And you can even see that inside of this outside candle, look how many inside candles there are, which also is just telling you that price has not chosen a direction yet. And this is just sort of meaningless chop. That's the way I view it. So, I wasn't on screen actually last week much in the early to the middle part of the week. So I wasn't around and I wasn't trading this stuff. If I were, I would have only been scalping. Just because I take these cues quite literally. When you see a giant outside candle like this, expect chop. And that's what happened. It went up It went up above the 50% level, but there was no continuation, at least on the 1 hour. There was no continuation. And when it tried to get down, you had a little bit of continuation, which would be great for a scalp, but then it immediately creates an inside candle, then another inside candle. Then it goes higher, right? But as soon as it gets above the 50% level, there's no continuation. Then you get four inside candles. I mean, this is just chop. And then you get an outside candle and another inside candle. I mean, this is a recipe for chop. And the clue for that was this giant outside candle. So finally over here, you started getting something a little bit more like a continuation. You had two in a row. You had an inside candle, very similar to what you had over here. But what's the difference? Why would I not get excited about this two candles in a row, two green candles in a row and then an inside candle versus these two candles in a row and an inside candle? Well, the reason I got excited about this versus this is because there's a squeeze present on this 1 hour chart. So that got me paying a little bit more attention. Okay, now there's a squeeze setup. And again, I didn't happen to be on screen to get long in this perfect setup here. I just wasn't able to be on screen. I missed it. But then when it came back down over here, I thought, well, maybe now it's going to hold the 50% level. Because look, it couldn't get above it here. It couldn't get above it here. But now it's getting above it with a 1 hour squeeze present. So that helped me to lean bullish, which means I want to try to get long. Okay, and the strat on the 1 hour is telling you be careful though, because you got red candle, and then this next candle here dip down and making it a 2-2 continuation, a bearish. Well, I guess this would actually be a bearish reversal. But here's the thing: I see a 1 hour squeeze, so I'm viewing this as a buyable dip because of the 1 hour squeeze being present. So I'm using two methods here. I'm using the strat method to stay out of harm's way, and I'm using the squeeze method to help me better guess, because that's all you can do is get your best guess. Okay, so now if we go down another level to the 15-minute chart, this is where I started trying to get long in here. I stopped out. Let me show you where that is. That's here on the 5-minute chart. So over here, I tried to get long. Got stopped out. Tried to get long again. Got stopped out. Tried to get long again. Got stopped out. I tried to get long 4 times. And actually, even though I got stopped, because I'm using Strat, 3 of those 4 stop outs were profitable. Now they weren't very profitable, but hey man, if you can get into a position and you're wrong, but you still made money, what's better than that? And then I did on the fourth one, the fourth one, actually I gave it some, I forget now, it was like a 23-cent stop and it got hit. So I lost 23, but I made way more than that on all the other, the previous 3 stop outs. I made gains because I was using, see what would happen is, look, I would go long and it would go up, but I kept moving up my stop per the strat method. So I got stopped out at a gain. Then I got long again. And then I raised my, and I got stopped again. Then I went long again, and then I got stopped again. And then somewhere here, the stop, well, it doesn't matter now. It's after the fact, but I got stopped and lost 23 cents-ish. But then I kept trying because of the 1 hour squeeze, was keeping my head in the game to look long rather than short. I had a bias. So finally I got long at 110.74 and immediately used the 5-minute to put the stop, where the strat said it should go. And then it just, a bunch of twos, boing, 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 hit all these poor bastards that were short, and putting their stops at the top of these candles. They just got stopped. And then a very small pullback. I didn't move my stop until this thing got up here. Now I love to use these boxes. You can see that. I always put a box around range. And then isn't it interesting? I mean, there's a reason I do that. It's because it's effective. That's why. Why is it effective? I have no idea. I don't care. So it came up, it got above the box, and then look what it did. It came down and sort of retested that level. And then once this candle happened, then I moved up my stop. And I was actually using the 15-minute candle. So I used a 5-minute candle for my original entry and stop. And then once it starts going as I had hoped, based on the squeeze, purse, and also strat, now I waited, but now I moved my stop up to the bottom of this outside candle. Because the outside candle is, I view it as price is saying, we don't know what we're going to do. Let's confuse as many traders as we can. Anybody who went long in here, let's stop them out. Anybody who went short in here, let's stop them out. And then the real move happens. So I'm putting my stop there is kind of like my way of saying, I don't think it's going to come all the way back because this candle, the outside candle, already did its job. So I'm going to put my stop there because I think it's unlikely. Now that it bounced off of this frame, this square, and it kept ripping, now what I think I'll do is move my stop up to the bottom of this candle. In fact, I'll do that on the Sunday night open, but so I'll just move the stop to the bottom of that candle, and then what I'll do is just grab the coordinates and then put it on the chart just for visual representation so I know where I'm at. So now I'm in at 110.74. Oh, that's interesting. It's exactly a $2 stop. So at this moment, the worst case scenario is I make $2 per contract, and that's $10 per penny. So in other words, $2,000 per contract guaranteed. I mean, unless there's something really nutty. Now we look at the 5-minute chart because that's where we're at. We're in a range again, right? We're in a range. And really, I was using this 5-minute candle as the range because, on Friday afternoon before the close, it came back down and touched the, let's see how close it got there. So the low of that candle is 114.69. The low of that candle is 114.68. But the low of the range is 114.63. So, at the moment, it's holding the range set up by this 5-minute candle, meaning actually, it did poke above there. But in general, this range is holding. But I think what I'm going to do is I'm going to move the range down to that 15-minute candle and just view this whole thing as the range. And then now what I'm going to do is I'm going to show you. Actually, let me get rid of the 50%. Last thing about the 50%. On the larger range, the 50%, what's interesting is when I went long, part of the reason I did this is it came down. Well, you can see it more clearly on the 5-minute chart. It came down and dipped below the 50% level of that large range displayed by this 1-hour candle. It came down, dipped below the 50% level, and then the next candle it started coming back up. So I actually jumped the gun. I front ran it a little bit, right? Did I? I thought I did. 110.74. Yeah, it wasn't a perfect strat entry, but that's because I had bias. I had a 1-hour squeeze in position, and it was holding the 50%. So I just went long. But then I did use the strat method to create a stop, because as soon as I went long, it jiggled around a little bit, but then the very next candle started advancing. So I immediately put my stop below the prior 5-minute candle. Okay, always limiting risk, always in futures. Always. You got to be very precise if you're trading futures. Or ask me how I know that. So the education was very expensive. So, okay, so now it held the 50%. That's the main thing I wanted to say. So then I started using the 15-minute to raise the stop. And so now I'm going to get rid of these fibs because that phase is kind of over. We broke out of that range and now we're consolidating up here. I mean, it could come back down. And if, whatever, I can put those back. But what I want to do for the sake of clarity, just take that off the chart. And now I'm going to put the fib tool. And I always use the same colors just to keep myself straight. When I'm doing the 50% of a box, I'd like to use the same colors always, just for consistency's sake. And then I'll note that's 115.96 is the top of that range. So 115.96 is the top of that range. Okay, boom. Well, isn't it interesting that price has been consolidating in the top part of this range, then it dipped down below it, and then it's coming back up. This is noise. This is chop. This is digestion. This is consolidation. And I like that, where it's consolidating, it broke out of this initial range and it's consolidating up here below the next target, which is 116.57. So we're going to open a 4-hour candle, and a daily candle is going to be an inside candle when we open Sunday night. I mean, unless it gaps up, which could happen. Recently, there was an enormous gap up last week, I think, or actually, I think it was last Sunday night, if I'm not mistaken. Massive gap up. So, who knows what's going to happen? I certainly don't know. I don't really care what's going to happen because I'm going to trade what is. So I don't really need to think too much about, the future. I just am going to trade what is. So what is we're in a range defined by this box. So when we open, if we can come back up here and I see some twos, nice move, I'm going to look for it to break out. Why? Well, because there's still the daily squeeze. The daily squeeze is still in effect. And this is just taking a break. This is high-level consolidation. So just a quick review. The daily, I'm looking for 5 to 7 bars of continued directional move, price action. And it already had the consolidation, I think. And now you're seeing like sort of a micro consolidation. It's just taking a breather. And it's also setting up. Now, the 5-minute squeeze, it didn't really work here, right? You had a 5-minute squeeze. See down there? Those red dots, that's a 5-minute squeeze. It didn't really play out. It was kind of a dud, really. So price is just consolidating. It's right back into another squeeze. But check it out. Now the 1 hour had a squeeze, which really, I failed to mention that. Failed to mention that. But that also contributed to the idea that when this came back and tested that 50% level, I'm trusting that the 1 hour squeeze is going to give you 5 to 7 periods of continuous price directional movement. And what you got was 1, 2, 3, 4, 5, 6, 7. So, and now, is it going to consolidate and continue? It certainly could. Let's keep an eye on this. Because the histogram is kind of flat in through here, right? It's consolidating. The histogram is telling you that it's consolidating. So let's see if it can, what happens on Sunday night. But that 50% level I'm using just as a frame of reference. If we get down below here, it could do that. Sure, it could. It could come down. What I'm paying attention to now is where do I want to take profits? Okay, so now the last thing, speaking of that, so I'm kind of out of targets. Right now. So now I'm going to go to my third method, right? So I've shown you the Strat method and I've shown you the squeeze method, and now I'm going to the third method, which is the Elliott wave method. And this is a very complex method. I think it's very difficult to learn. It requires a lot of study and a lot of experience to get good at it. It's very difficult. However, I use it because it can be very helpful, even though I just said it's really difficult. So this chart here was the lowest probability setup that I had for Elliott wave. And wouldn't you know, it played out more or less. I mean, this was the low probability, and it was really a combination of the squeeze and the Strat that kept me. Oh, here's that gap up from February 25th into 26th. From the 25th, right? Yeah, so that was a Sunday night gap up right there. Look at that. I mean, that's remarkable. And then it didn't even give it back. It did come back, and I shorted it, actually. I shorted this. It did come back to just below where the gap started, but it didn't at all fill the gap at all. Nothing close to that. But anyway, so Elliott wave, I had this as a 3 top, 4, and then now we've got another 1, 2 in place. 1, 2, and we'll get 3, 4, and then a final shove up. And I use this pivot. If you don't know about Elliott wave, just a short story is if you get above the pivot, which we are right there at the pivot. And what's interesting is when these different methods kind of line up. Like this pivot, this area, has nothing to do with Strat, has nothing to do with those boxes that I drew. But the Elliott wave method suggests if this really is a new 1, 2, and we are going to go higher. Once it gets above this pivot, the idea is that it should not come back down below this pivot. It can get in there and it can meander around and maybe dip below, but the idea is if this count is correct, which has, I know this sounds like crazy talk, but if the target for crude of wave 5, this wave 5, the one in the Roman numeral in parentheses of this is a degree. So the 5 of this degree can target 125.69. And what's interesting is there's confluence there of wave 5 of the larger degree, which these green fibs represent, which also has a reasonable target for a wave 5 at 2.382 at 125.52. So you could consider this confluence, right? So this is what's giving me a rough idea of a target. And that's why I'm going to use wide stops, because if this wants to be volatile and meander around before it continues, in other words, further consolidation, I don't want to get stopped out because I worked really hard to get into this long.
He worked very hard to do these stocks.
That's right. Thank you, Miles. So I worked very hard to get into that long right here. So I don't want to use a 5-minute stop. And I don't even want to use a 15-minute stop. I mean, a strat stop, a technically accurate strat stop. I would have already gotten stopped out had I been using the 5 or the 15. But you see, I scalp with one eyeball on a swing. So this has turned into a swing trade. I should have mentioned that first, but this is now a swing trade for me. But I don't want to be an idiot and give back these delicious gains because, Strat, the thing I do like about Strat is they'll tell you, look, stop out and take your gains. If this, and so I'm going to define that somewhere. If this, I want this to hold this box if I'm going to stay long. Now I'll give it room. I'm going to definitely give it this entire box to chop around if it wants. But not much more than that, because you see, another thing about the Strat, look at this 1 hour candle. If this wants to come back down, if it keeps coming and gets below about the 50% level of this candle, then that means that there's, on this time frame, there's a trend, a downward trend. So I don't really want to be on for that, because if I do take gains, let's say I take gains, so you can see over here on the 15-minute. Right now my stop is 112.74, but it wouldn't be unreasonable to put my stop at the bottom of that 15-minute candle. But I think what I'll do is hope that I'm able to just be on screen. Well, I know I'll be on screen Sunday night. So I'm going to watch how this develops. And what I'd like to see, what would be really cool is watch this. This is another thing for Strat. Just take a trend line and stick it on there. And then just kind of keep an eye on it. Now I'm not trading I'm not really trading on trend lines. But I think they're good for context. They're good just for reference. That's all. Just a point of reference. Like, where am I at? Where am I? Where am I? Well, where you are right now is you're holding this trend line. Look at that. So, and it doesn't mean, it can come down, whatever. Look at this. So for example, if you'd have been, if your definition of risk was, I don't want to hold this thing if it gets below this 50%. Well, yeah, you lost the trend line and you lost the 50%. So you would have stopped out, right? But it held this trend line. So, whatever. So this is what I'll be looking at Sunday night at the Open. I'll be watching this box. And if it breaks out above, if it makes a new high, it's just very likely going to go to 116.57 for sure. But then what? Okay, so back to the Elliott wave. The next fib up would be the 200 fib based on, of the larger structure, which is 119.01. So imagine having, $3 more to go. Once you get up into here, you break out, you're going to get, call it 250. $2.50 move. It's totally possible. Why? All those reasons I just said. And in the back of my mind, I'm aware that the daily squeeze is there. If we consolidate a little bit more Sunday night into Monday morning, you could get a few more dots on the 4 hour chart of a squeeze. Actually, let me just extend this over. We'll see if this box holds as well. So there you go. I'm using 3 different methods all at the same time to gauge what's going on in crude oil. I know I talked a lot. I said a lot. Feel free to ask questions in the comment section. And, I don't claim to know much. I'm just learning from other people who are way more knowledgeable than I am. But I've been trading crude successfully really for several months now, right? I've been studying this for 3 years in earnest. And I really turned a corner once I stopped trying to trade too many other instruments and I became more exclusively focused on trading crude. Then all of a sudden my trading improved dramatically. So that's my disclaimer. I certainly don't know the future, but between all 3 of these methods, I'm certainly protecting my capital and I'm actually making good gains. So I couldn't be happier. Just sharing in the spirit of continued education. And everybody has to find their own thing that works for them. And what's working for me is a combination of Elliott wave, Strat method, and the John Carter squeeze method. Cool. All right, guys. Take care.